What is up, everyone? Welcome back to the YouTube channel. I hope you guys have all been good. Hope you had a great and relaxing weekend. We are now entering the final month of our Q1 of 2026. It's crazy how fast time is flying. As always, every Sunday I like to go through around a select names that I like and I want to share my thought process behind. And if you'd like to receive my watch list a day or a few hours in advance before my video gets released, don't forget to give me a follow on X at AB Trades. And I also released a checklist, and I'm going to remind you guys for a few more weeks about this checklist so you can utilize it to identify all the confluences that I like whenever I'm trading. Now, there is a select name that I will cover today that actually has a lot of confluences from that checklist, and it's probably my favorite setup going into the week. Okay, so remember, none of this is financial advice. This is just me sharing how I am approaching the market and hopefully gives you a few ideas to add to your own. So without further ado, let's go ahead and get started, right? This is the final month of our Q1, so let's end it with a bang. First up on the list is KHC, ketchup, as I like to call it. And I've been talking about this setup for maybe 2 weeks now, and I don't think it's invalidated yet, right? If I go ahead and delete everything and I just show you the weekly, this is having really nice signs of buying. You haven't had, when you just kind of show and demonstrate what the weekly's been, the overall time frame and alignment on this has been down, right? The overall trend has been down. But when you come back right around down here, like now had consecutive weeks, 1, 2, 3, 4, 5, 6, where price fails or like just does not want to aggressively continue that downtrend, right? You've been protecting this overall 22, 23 area. And when I go into the 2 day and the daily, like you can see this development. Obviously you had a failed 2 on Friday, but you're still holding the overall narrative of the structure. So I need to go back and get all my drawings back. One sec. Oh shoot. There you go. So you're still holding the overall structure, right? And one thing that can still happen because we have not had a consistent, and that's what's needed right now is a strong daily close above 25. If you can get a strong daily close above 25, you then want to see that continuation. So get a daily close above and then get a continuational candle afterwards, because that's what can start this overall compression state that it is in. Price is absorbing both sides. You are sweeping a little bit more buy side than your sell side. So also understand that we could still be in a potential 3 driver pattern. And that is something I'm going to be keeping an eye on for catch up. I mean, the development between 25 and 23 is all buyable for me for a push later into the summer. So keep on watch, right? You have really good weekly development that is trying to change the narrative. There is still potential for a 3rd driver down to kind of complete this move here that then gets you a true discounted play off of the bottom of the range. So if we swept here, right? We could still go for one more sweep, which is what I would personally like for a really good entry. Now, it doesn't have to happen. You just want to see if you clean up some of these lows. It doesn't have to though, because of the weekly compression state, right? This is now creating another range. And we do know that when that range is developing the way it is because it's entering its new cycle of the curve, right? When you consolidate in these ranges and you break down, you consolidate and then break down, et cetera, right? But when you're changing that state of delivery, when you're changing that cycle of the curve, is because something like this happened. You go here, 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 and then here. And now you're consolidating above this, right? You're absorbing to create the next leg up. So I think catch up is just going to be in this state of consolidation for a little bit, with the range being between 22 and 25. Now, this would overall invalidate for me if you do get a daily close under like 22.6. But so far it looks really good. It's just stuck within this external time frame. And I think this eventually leads to a bigger breakout of this really nice LRLR on the higher time frames. Next up on the list is UAMY. And I really like this setup because of what you did and what price is now currently doing, right? And something I always ask myself whenever I'm looking at charts, it doesn't always have to be, oh, are you at OTE? Which, I mean, if we come in here from swing low to swing high, which would be right here, and then we go in and get the true OTE, right? Yes, you did deliver in discount, but it doesn't always have to be like that, right? You don't always have to look, oh, force it. Yes, this has really good repeatable setups, but something else that I like is when someone says, oh, we're not in discount anymore, we're not in, the play's done. No, that is not true. Because remember, when you're trading the overall structure of those discount entries, and let's say you're here and then you're like here. If this was your discount entry and based off of the structure, every single time that discounted entry expands up into those new highs, right? So even if you're developing here, this is the internal of the external, right? If you're still developing here and you're developing to support that move against discount, you can still get an entry within that internal structure, because you know that that internal structure is just a smaller window of what's eventually going to happen. So just because something is not in discount anymore doesn't mean, oh, the play is invalidated. It just means your risk reward diminishes a little bit, but the overall integrity of the structure is still there. So like whenever I look at, sorry, whenever I look at UAMY, look at how price is now developing. What I really like about what this did is like you had this really nice range low established here since January, and look at what this did. Not only did you get that weekly range low sweep, you came back into a really nice daily breaker paired with your golden pocket that then redelivered. And this redelivery actually, if I go into the 4 hour, look at the 4 hour. The 4 hour looks really good. This is what the 4 hour did relative to the daily. You go here, 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 and then here. You now have a really nice small internal structure shift that is being supported on the daily because of how price delivered out of discount. Remember, one thing I always talk about is when you get into that discount or when you get into that point of interest that matters to you, how is price delivering out of it? And when you deliver with displacement, does that not kind of confirm which side in that given auction is the aggressor? Because remember, the market is looking for a set of buyers and sellers every single day. And we want to be in favor of the side that is the leading aggressor because they will have the upper hand. So when I see this development on UAMY displacing out of discount after a really nice weekly sweep into a daily breaker, right? So much confluence with some established LRLR. Now we're consolidating above where we just displaced to change the structure within the internals. So if the internals are flipping, we should potentially try and now look for a move up into 10.3 and maybe even as high as 12.5. If this is going to be a true higher low, we want to now expand into the next higher high. So I really like this. I mean, this would invalidate for me if you start to get a daily close back under 7.7, because then that would invalidate this move and you're still stuck within a daily range. You just have this these supportive PD arrays now out of all the confluences that existed down here in the low sevens. So you want to just hold the integrity of that and see if this development can get you a nice move into the 10, 11, 12 ranges. Next up on the list is AOS, and this has really pretty structure, right? Not only from swing low to swing high, you come in a discount. Buyers definitely step up within your weekly breaker. Last area of supply that displaced through. It took about 3 weeks to kind of come back and reset, which is what you did. And you managed to hammer on the week while the overall market was actually pretty weak. And you closed near lows. And this one actually closed near weekly highs, showing some nice intent on the daily with a decent little daily displacement. I would love to see continuation. Doesn't have to though. You could easily get more resets. Anything above 73.81 I think is a buy on AOS. If you do get a daily close beneath that, then it does kind of invalidate that SR flip off of your golden pocket with a weekly breaker. Now trying to displace, right? You had a nice inside 2 up and I would like to see continuation on that, because this LRLR also lines up with my deviations from the daily manipulation over here, right? -2, -2.5. If this does break out, I would like to see that higher low expand into the higher high. Really pretty setup. And this is the one I was talking about in the opening segment of my video, about the one that has a lot of confluences that I really like. Next up is a simple chart, and it is UPS. I do think it is doing a similar degree of buildup as to what it did in October of last year. Very similar, right? You had an aggressive move up that then kind of entered a period of consolidation for around a month or so, a little bit less. And so now I kind of think you're doing something similar. And I think as long as UPS builds above 108, 109, which is very much buyable, you did just come off a really nice sweep with a really nice counter move. So if we go on to the 2 hour, you can see you are setting up here. There is a potential for a little dip and rip to create a potential little inverse head and shoulders on your hourly. So watch UPS into that like 113, 114, see if it wants to develop off that. But overall, like, this has really nice structure, and I do think you get a really nice run up into about 125 or higher pre-ER. So however you want to position yourself for that, just understand UPS does go into about, you know, a few sessions of consolidation, but all that is because it's absorbing and you're staying, you know, you're conforming to the overall structure, because the overall trend on this from just a weekly standpoint is just really pretty, right? Displace, consolidate, displace, consolidate, displace, consolidate, displace, consolidate. Does this final displacement give you that push into that 124, 126? Which I do want to assume it does. But like I said, look, this one went through about 4 weeks of consolidation, 3 weeks of consolidation, 3 weeks of consolidation, 3 weeks of consolidation / absorption. So that's why I'm telling you, it does go through those cycles, and you do have to be a little bit patient. But those manipulations that it usually has are usually money. What I mean by that is, look at the manipulation here, look at the manipulation here, look at the manipulation here, look at the manipulation here. And a lot of them have been within your discount, right? So it's in a really clean cycle. I wouldn't be surprised to see if you get some kind of aggressive sweep that then gets countered. And if not, then just understand that that 113, 114 is what gives you that hourly development and potentially starts to push you. Next up on the list is Meta. And I am looking to see this golden pocket of the overall trend, which is now trying to develop into a higher low. Whether or not you go for a sweep into the gap and then reclaim back up, or if you just continue to build in here, I do think Meta is trying to set up for a move into about 685 and 700. Just a simple chart, similar to what you did over here. I am trying to see if you get another move somewhere around this area. So it looks good. UNH. Unfortunately, this one did stop me out, but it has not invalidated actually, because even though you got a very aggressive displacement move, you still developed a higher low relative to this last known low, and then look at how you counter it back up. You almost went outside day on Friday when the market was nearly melting down. And so now that I look at this, personally, that 275 is still money, and I still think UNH, based off of this development, wants to make a move for that 300, like 309 area. Whether or not you continue to consolidate, because you do now have an established range here, whether you consolidate above this, I do think you're trying to make a move back up into that upper 300s. And now the key from here is, can you just continue to get daily closes above that 274, 275? Same for Eli Lilly. And what I really like about Eli Lilly is this weekly development. You are getting some crazy consolidation. Now, I don't think you get another scenario like this, where this was about like a year and a half of consolidation. Now, there is the question, like, this could just stay in this range until ER, but that doesn't mean we can't trade it, right? You are now getting really nice weekly consolidation above your yearly breaker that kept price from expanding since 2024 up until literally the last quarter of last year. So over a whole year worth of development that you finally broke out, and you did actually retest it coming into that December. but now you're consolidating once again. And so I think this is just a really good range trade between 1000 and 1100. When I go into the daily, you had really nice daily displacement against multiple gaps. So now is, can you Eli Lilly stay above 1025? Maybe get some kind of daily reset, because sometimes they like to open within the range and then expand out, which would put you back into the 1100. Really nice range trade, really nice weekly development. I do favor some healthcare names to do really well this week. Same for same for ABBV. Really nice weekly and monthly sweep back into the range. Now a failed 2 down on the weekly. This kind of move is also creating some nice LRLR because none of your major buy side has been taken out. It's only been the sell side liquidity against a monthly sweep back into it. And what I like about this too is, like, dude, you're still respecting the higher time frame breaker. There's been no weekly candle close underneath, and I will actually do this one a little bit better. We'll just do that, right? You've actually, oh wait, I think I had my bad. I think I had one for an actual breaker. Yep. You've actually still been maintaining candle closes above. And remember what I tell you, like, candle closes, the context of candle is also very important. How are you building it? How are you closing? Where are you coming from? Did you sweep any major lows or highs? And this looks freaking phenomenal, right? Earnings are not until April. And unfortunately, yes, ABBV is definitely one of those ones where you have to be super patient, and you definitely don't want to buy the expansion candles. You want to probably wait a few days afterwards and see what you get. But this weekly development, right? If you get maybe like something in April or May, does put you back up into that 250 range. A lot of healthcare is looking good. I mean, look at J&J still expanding. I do think ABBV can definitely do something similar, especially because you've been consolidating between 240 and like 210 since September of last year, right? About 4 or 5 months now worth of development against your weekly and monthly breaker. And you are now threatening, well, you're not threatening outside month anymore because we have new monthly candles. But look at this development. And that's kind of what healthcare does. Like, look at it here, right? You just get stuck in a consolidation range until you break out. You get stuck in a consolidation range until you break out. So that's what I'm saying. You don't want to buy them on those expansion candles. You want to buy them when you get those like little developments towards the downside against the range. And so keep an eye on ABBV. I think it's building out really nicely. I think we take advantage of those dips, even though you did just get a really nice sweep with ER, which could have been that overall liquidity hunt against the breaker. So keep an eye on this one. Looks very, very nice. Next up on the list, and this will be a really quick one, is against the 4-hour, and it's just something I've noticed. Some software cloud related names, and I'll just go through them really quickly, right? You have really nice development against your broadening lows here, and the way you're kind of now developing against those broadening lows countered with the displacement, as long as that, I guess, that little low, the last defined low, the last down kind of before an aggressive move up holds, I do think these could be potentially in a lower time frame shift that potentially start to domino into the higher time frames. So for PANW, for example, if we can stay above 141, I think it makes a move into 155, 160. When I go to now, similar development, except I think, oh, I didn't have it drawn out, but similar development to PANW. If we can stay above like 102, I think this makes a move back up into 113, even 116, right? And there was actually some good flow, especially when, right, this low here, 99, swept 99.27, this is 99.18, and then you left exhaustion against sellers. Sellers exhausted and didn't give you a full sweep. Why? And then they countered it with a gap up, retest, and now pretty much hammered the 4. This one had a really decent day. So with this kind of development, as long as you hold the integrity of those gaps and those lower time frame developments, they could see some potential upside before lower. Same for Datadog, right? When I go into Datadog and I show you this, we covered this in 8x trades sometime last week, middle of last week, and we talked about, hey, we are now doing a similar trend, right? Third driver, driver 1, driver 2, driver 3, and each one of those drivers had a really good representation of buyers for a few days, right? And then you develop down. Similar window, 17 days, 18 days, and then you got the expansion. And then as you can see here, right, you got at least a few more days. So I think Datadog now hammering and filling this gap and pushing back up. If Datadog can stay above 104, I think this can still make a move into about 120. Similar to how PANW and Now look, I am giving a little bit of upside to some of these software and cloud names. Google is another one that I'm looking at, and this one's against the hourly. Right, you have the potential to flag, you have the potential to flag and compress against this hourly structure that could develop into something. Now, this one is a little bit more higher risk because you don't have any strong PD arrays to really utilize on the higher timeframes apart from that little volume imbalance that you did fill, which also lines up with your hourly higher low / golden pocket. So I would say if Google can stay above 301, there's good potential for this to get this kind of compression break here and expand back into this gap around 320, 322. So keep an eye on this kind of absorption phase of price as long as we can stay above 301. Now, again, you could still do one more sweep and back in, but as long as you protect these lows and continue to get daily closes above 301, you could eventually get a really nice push back up into 320. Next up on the list is, what the heck's going on? Is CARR. And this one's just more of like a momentum trade against your weekly. You have a really nice weekly sweep where buyers continue to defend, which is also establishing a really nice form of aggressive compression. Because when I show you the daily, this one's actually showing relative strength against the market and you're displacing through a external gap. So now we can use this as a flip point, and when we enter the 4 hour, you could see why. Really nice displacement against your previous day high. If price can now stay above like 63, I think this development eventually starts to target this really clean trend here. So I'll come in and I'll like annotate it. Go back to the daily. So I'm looking for potential early revisits of that gap against your Thursday high. So somewhere within that 63 range to see we can now get some kind of LRR development, and my target would be 70. This is more of just a momentum trade with how nice those weekly sweeps continue to develop price. Now, the only thing different from this is that these last weekly sweeps had failures. This weekly sweep is displacing through. So maybe now Carrier Global is actually ready to accelerate. Dow, also a similar one. And this one is just a very clean discount trade with LRLR and an outside day with relative strength. So similar to CARR, right? I would like to see this kind of breakout. This is actually a really clean chart. This one, CARR, AOS, UAMY are definitely my top 4 for the week. I mean, I like the other names, but these I would give a little bit more emphasis on just because of the confluence that exists. And yet again, you have a really nice breaker here. We'll go in and annotate this. And I actually have a question for you guys, as this is about to be the last name. Do you want me to continue doing these watch lists where I already have everything pre-annotated? Or would you like me to potentially throw in random watch lists where nothing is annotated? I just have the ticker that I like, and I'll go in and I'll actually annotate everything live so you can see what it is I'm looking for, rather than you already coming in and I already have everything already pre-annotated. Would you like to see me start from scratch? Not something I will do every single watch list because it will take more time, but I could definitely gather my top 5 here and there and do something like that if it interests you. Completely random, I know, but let me know in the comments if that's something that would be cool to see. So yeah, with Dow, nice displacement with a previous week low sweep back into the range. Your daily showing really nice signs with the 4 hour continuing its progression against the market. So this is really good relative strength. I think as long as price develops above this breaker, we are now setting up a really clean LRLR, and I would like to see this eventually trade back up into 30. Now the question from here is, we can now utilize here to here to here as our little manipulation leg. Just trying to anchor it correctly, and we can see where our -2 lines up. Look at that. Our -2 actually lines up into new highs. So 35 and 36 actually looks like a really nice trade. All we need to see now is we need to see some aggressive move through 30.84. Since we already got the delivery out of discount, we now need to see how well we can conform to this move here. Can we now stay above those previous day highs and respect candle closes above 30? That eventually allow a nice absorption to then displace, retest, and run back up. And finally is CARR. Unfortunately, this one does have ER coming up, but I would love a dip and rip that trades back up into like 75. This one is just more of like an ER potential trade to see if we get any kind of true discounts, see how it plays out into those post earnings. And yeah, that is pretty much it for the watch list. As always, I do these for you guys. Hopefully you can learn a little bit more about my trading style. It's very, very repetitive, and I'm sure by now you are all annoyed by, oh man, these videos are always the same. But repetition is boring because repetition results in results, and results are something we all want, right? So yeah, hopefully you guys enjoy. I will see you all next week. Good luck this week. See ya.
Yeah.